Hello students, let's solve next question. Mr. X furnishes following P&L account. You are required to compute taxable income from business. To salaries 30,000. To rent of business premise owned by assessee. Okay, so to rent of business premise owned by assessee, that means he has a business premise where he is conducting his business and it is owned by him, okay, and he is paying rent to himself. Okay, so this is not a business expense. Fine, so this is not allowed. He is paying money to himself. So this 6,000 you will add back. To taxes and insurance, to interest on loan, it might be loan for business purpose only. Okay, so it is a business expense. To commission for arranging loan, okay, you are paying commission to arrange loan. Fine, that is also a business expense. It depends, loan is for which purpose, okay. If loan is for personal purpose, then these are personal expenses. If loan is for business expense, then it is business expense, okay. So if nothing is given, always assume loan is for business purpose. To provision for depreciation, okay. So provision is not an expense, it is not an actual loss. So provision or to reserve, you will not take that into account, okay. So provision for depreciation 6,000 you have to add back. To reserve for bad debts, again you have to add back. To bad debts, okay, bad debts is a loss, so that is business expense, fine. To preliminary expense 25,000, okay. Now for preliminary expenses, what is the meaning of preliminary expenses? Before commencement of the business, the expenses which was incurred before commencement of the business, that is preliminary expense. And preliminary expenses can be write off in first 5 years, correct? We will assume that this is the first year of the business, okay. Always assume this is the first year of the business, and accordingly you have to make the calculation, okay. I'll give you note on this. Next, to loss of stock by fire, okay, 5,000. It is a business loss, fine. To gift and presents, it can be for business purpose only. To embezzlement of cash, that is misappropriation of cash, it can happen, it is a business expense, okay. To cost of patents, okay, to cost of patents is a capital expenditure, correct. So cost of patents you will add back because it is a capital expenditure. Next, to postage and stationery, okay. To establishment expense, okay. To fine and penalty, okay, mark a star here, because to fine and penalty is always disallowed, okay. Fines and penalties are always disallowed. Suppose you do not file your income tax return on time, okay, you file after due date, you have to pay a fine. So that fine is not allowed, okay. So fine and penalty is always disallowed. So yeah, to entertainment expense, fine. To expense of scientific research, okay, mark a star mark here again. Mark a star mark in preliminary expense also, okay. To expense of scientific research, now scientific research, always assume that it is for business purpose, okay. It can be capital in nature or in revenue nature, it is always allowed, okay. Write a note. Scientific research is always for business purpose, it is assumed that it is always for business purpose. It might be of capital nature or of revenue nature, always allowed, okay. Next, to advertisement 4,000 fine. To compensation paid for terminating disadvantaged trade relationship 5,000, okay. This is also a business expense. Now you are doing some business with some person and then you realize you have a relationship with that person. Now you are doing business together, and you realize that in future this relationship, because of this relationship there might be loss, so you terminate the trade. Okay, when you terminate the trade, you have to pay compensation. So that is a business expenditure. Okay. To legal expenses 5,000. Okay, that is also business expense. Next, to interest on capital. Interest on capital is not a profit and loss item, correct? So this interest on capital you will add back. To LIC premium. To LIC premium, again this is personal, so you have to add back. To general expense, that is fine. Now let's see the credit side. There is nothing in credit side, and there is a net loss of 75,000. Fine. Now let's see additional information. First, the cost of project on last day of previous year is rupees 4 lakhs. Okay, this information is given so that you can calculate preliminary expenses. Okay, only 5% of cost of project or 5% of capital employed is eligible, is qualified for deduction in case of preliminary expense. I'll give you a note on this. Okay, that means now cost of project is 4 lakhs. 4 lakh into 5% is how much? 4 lakh into 5% is 20,000, correct? So only 20,000 preliminary expense you can claim. Okay, and this 20,000 you cannot claim in the first year, you have to claim in 5 years. So 20,000 divided by 5. So 20,000 divided by 5, whatever is the amount, only that much you can claim as preliminary expense. Okay, and remaining everything would be disallowed. Got it? Next, expenditure on scientific research include 20,000 towards construction of building for the purpose. Okay, how much is expenditure on scientific research? In your P&L account, expenses of scientific research 30,000. Out of 30,000, 20,000 is of capital nature, correct? Expenditure on scientific research includes rupees 20,000 towards construction of building. Towards construction of building means of capital nature. But it doesn't matter, because expenditure on scientific research, it can be of capital nature or of revenue nature. Both is allowed. Okay, so this 20,000 is also allowed. So you're not supposed to do anything about it. Okay. Next, legal expenses include cost of litigation amounting to rupees 4,000 for curing the defects in the title of the business assets. Okay. Now, suppose you have purchased a machinery. A businessman has purchased a machinery. You have purchased a machinery, that machinery belongs to you, belongs to the company. Okay. But the title is not that clear. So you have spent legal, title is not that clear means, suppose you are purchasing a land. Okay, you are purchasing a land, and through whom you are purchasing, the title is not clear. Okay, and so you have to make some legal expenses to clear the title. Okay, the owner's name is not that clear. Got it? So in that case, you have to make some expenses so that you clear all, you clear the name, the title of the business asset. Okay, so this expense is not a business expense. Okay, it is not allowed. So this 4,000 you have to add back. So legal expense of 4,000, which is to clear the title of the business asset, it is disallowed. So you have to add this 4,000. Okay, just mark it disallowed. Next, general expense include rupees 6,000 drawn by the assessee. It is assessee. Okay, it is not assessed, assessee. Yeah. Now, general expense includes rupees 6,000 drawn by the assessee. That means General expense includes rupees 6,000 drawn by the assessee for his personal use. So the 6,000 is drawings. Okay. So this 6,000 you will add back. Okay. And rubbered by an employee who was asked to make some purchases for business. Rubbered means a rubber coating is called as rubbered by an employee. I think the word should be drawn by an employee who was asked to make some purchases. Okay. Rupees 1,000. Just a second. And rupees 1,000 rubbered by an employee. Okay. By an employee who was asked to make some purchases for business. So 1,000 was removed by assessee for his personal use. That means drawings. Not 1,000, 6,000. And 1,000 was removed by employee. Employee removed 1,000 rupees so that he can make some purchases related to business. That is okay. Now 1,000 is business expense only. Because that employee has removed 1,000 so that he can purchase, he can do some expenditure which relates to business. Okay. So that is not a problem. But 6,000 which was drawn for personal use, that 6,000 is drawings. Correct? So which is not a P&L item. So that this 6,000 you have to add back. Okay. Next. And rupees 3,000 being cost of installing new telephone. Okay, now tell me, rupees 3,000 being cost of installing new telephone. What is the meaning of this? Okay, now installing new telephone is a capital expenditure or revenue expenditure? Installing new telephone. When you install new telephone, you install it for more than 1 year. Correct? Telephones usually work for 3-4 years. So it is like a capital expenditure only. Correct? But in any company, in most of the companies, it depends on companies' policies, but in 90% of the companies, this expense is so small that they consider it like a revenue expenditure. Okay? Because the amount is so small, they don't capitalize it. Okay? So it is believed as revenue expenditure only. So rupees 3,000 being cost of installing new telephone. Okay, it is actually a capital expenditure, but in companies you don't capitalize it. You consider it as revenue nature only. Okay, so this is allowed. So you are not supposed to do anything about it. Okay, so installation of new telephone is assumed as revenue expenditure because rupees 3,000 is a very small amount. Okay. You don't capitalize everything, right? So this small expenses like telephone expense, it is very small expense. So you don't capitalize it. Okay. You consider it as a revenue expenditure and it is allowed. Okay. Next. Depreciation allowable as per Income Tax Act is rupees 8,800. Okay, so actual depreciation is 8,800 which is allowable excluding patent's right. Okay, so patent right. What is the cost of patent right? This depreciation 8,800 is excluding depreciation of patent rights. So you have to calculate depreciation of patent right. So what is the rate of depreciation for patent rights? It is 25%. Got it? Let's solve this question. Okay, first let's write the notes. First one is for preliminary expenses. Computation of qualifying preliminary expenses. Computation of qualifying preliminary expenses. What you take? You take 5% of capital, 5% of capital employed, or 5% of cost of project. Whichever is less. Okay. So in this case, capital employed is not there. Capital employed is not there. Cost of project is given. Correct? So here, cost of project in your adjustment 1, it is given as 4 lakh. So 4 lakh so 4 lakh into 5%, it comes to 20,000. Correct? So only 20,000 you can claim as your preliminary expense. But this 20,000 can be claimed in 5 years, first 5 years. Correct? So I'll just write down. Preliminary expenses are allowed one-fifth of 20,000 in the previous year. Okay. That is 20,000 into 1 by 5. So 20,000 into 1 by 5 comes to rupees 4,000. So during this year only 4,000 is allowed. Okay. Therefore, balance is disallowed. So how much is disallowed? 25,000 is there in your P&L account. Only 4,000 is allowed. So that means 21,000 is disallowed. So you have to add 21,000. Okay. This is your note 1. Note 2. Loss of stock by fire. Compensation for terminating trade relationship. robbery, that misappropriation, etc. Okay, robbery are allowed. Are allowed business expenses. Okay. Fine penalties are always fully disallowed. So fine penalties are always disallowed. Okay, loss of stock by fire, compensation for terminating trade relationship, robbery are allowed. And last one, scientific research is assumed to be related to business and fully allowed no matter its capital or revenue. No matter its capital or revenue expenditure. Okay. And cost of installation of new telephone. Fifth one. Cost of installation of new telephone is considered as revenue expenditure because the amount is too small to be capitalized. Okay. Now let's start solving the problem. Make 3 columns, particulars, amount. Write down, because there's net loss, so write down net loss as per P&L account. $75,000, write in bracket so that you remember that it is a negative amount. Add disallowed business expenses, expenses to be treated separately. Now let's see our P&L. Rent of business premise owned by assessee 6,000. Correct? So rent of business premise owned by assessee which is 6,000. Next item would be tax and insurance, interest on loan, commission for arranging loan, provision for depreciation 6,000, reserve for bad debts 5,000. Provision for depreciation 6,000, reserve for bad debts 5,000. Correct? Bad debts, okay. Preliminary expenses, yes. Preliminary expenses you have calculated, right? 21,000. You have calculated 21,000 is disallowed. So you can write that now itself if you want to. You can write in the bracket note 1. $21,000. Next, loss of stock by fire allowed, gift and presents allowed, misappropriation of cash allowed, embezzlement of cash is misappropriation of cash. Okay, it is one and the same thing. Cost of patents, cost of patent is capital expenditure. So cost of patent $28,000. Postage and stationery establishment expenses, fine and penalty, entertainment expense, expense of scientific research, advertising, compensation paid for terminating disadvantaged trade relationship, legal expenses. Okay, legal expenses 4,000 we have calculated already. We have seen in the adjustment. Fine. That also you have to add. Interest on capital and LIC premium. Interest on capital, LIC premium. Right? Because interest on capital is not a capital item. LIC premium is personal expenditure. Interest on capital and LIC premium. Interest on capital was 5,000, LIC premium was 2,500. Right? To general expense, that is fine. In the credit side, nothing is there. Cost of project on last day of previous year was rupees 4 lakhs. This is given so that you can calculate preliminary expenses. Right? So 5% of cost of project or 5% of capital employed, whichever is less, that you will take. Okay? Capital employed, you cannot calculate capital employed because balance sheet is not there. Cost of project is given 4 lakh. So 4 lakh into 5%, 20,000. So maximum preliminary expenses can be 20,000, which is allowed. But 20,000 you cannot claim it in the first year itself. You have to claim it in 5 years. Okay. So in the first year you can claim only 1/5 of the amount, and the next year you can again claim 1/5 of the amount, and the next year again you can claim 1/5 of the amount. For 5 years you can claim 4,000, 4,000, 4,000, 4,000, 4,000 and 4,000, which makes it 20,000. Okay. So during this year, out of 25,000 only 4,000 is allowed. That means 21,000 is disallowed. Okay. So out of 25,000 only 4,000 is allowed. That means 21,000 is disallowed. So this 21,000 you have added back. Okay, which you have already done. Right? Preliminary expense 21,000 you have already calculated. Next adjustment, expenditure on scientific research includes 20,000 towards construction of building for the purpose. Okay. So scientific research, you will always assume that it is for business purpose. Okay. And in your P&L account, expenditure on scientific research was 30,000. So out of 30,000, 20,000 is towards construction of building. This construction of building, that means it is of capital nature. So out of 30,000, 10,000 is revenue nature and 20,000 is capital nature. That is what they are saying in the adjustment. But in case of scientific research, capital expenses which are of capital nature are also allowed. Okay. So this 20,000 is also allowed. So you will not add back. Okay. Next, legal expenses include cost of litigation amounting to rupees 4,000 for curing the defects in the title of the business. Okay, so this legal expense, okay, this 4,000 is disallowed. So write down legal expenses 4,000 that you will add back. So this 4,000 you have to add back. Okay. Okay. Next, general expense include 6,000 drawn by the assessee for personal use. That means 6,000 is drawings. So general expense includes drawings. $6,000. So that's why 6,000 you are adding back. Okay, next 1,000 was taken by the employee. Okay, why he took it? To buy some, to make some purchases for business. That means it is a 1,000 is business expenditure. Okay, so underline 6,000, write their drawings. Underline 1,000, write their business expense. Okay, and underline 3,000, write their business expense. You have already written note on it. Correct? Note 5. You have already written it. Cost of installation of new telephone is considered as revenue expenditure because the amount is too small to be capitalized. Okay. So 1,000 and 3,000 is a business expense, so nothing about it. But 6,000 is drawings. It is not an expense. So 6,000 you will add back. Depreciation allowable as per Income Tax Act is 8,800 excluding patent rights. Okay. So depreciation as per Income Tax Act is 8,800. See there, any depreciation is there in your P&L account? Check it. No depreciation. Okay. So that means 8,800 you have to subtract from the profit. Correct? So that's it here. less income to be treated separately. There is no income. Or exempted income. Exempted income is also not there. Allowable business expense. Allowed business expenditure, I'll write. Okay, allowed business expenditure are there now. First one is depreciation. Depreciation is allowed. So depreciation of 8,800 which is allowed. It was not there in your P&L account, but it is allowed. So that you can subtract from your profit. And depreciation of patent. Okay. Now, what is the cost of patent is 28,000. Okay. Now, let's see. Here, only cost of patent 28,000 is given. Okay. Which date it was purchased not given. So, we will assume that it was there for whole year. Okay. So, you can just calculate 25% of 28,000 into 25%. So 28,000 into 25% is how much? Please calculate and write it down. So it comes to 7,000. Right? So 6,000 plus 6,000 plus 5,000 plus 21,000 plus 28,000 plus 5,000 plus 2,500 plus 4,000 plus 6,000. Okay. So when you total it, it comes to 83,500. 83,500. You do 83,500 minus 75,000. It comes to 8,500. And 8,500 minus 15,800. So minus 15,800, you get 7,300 business loss. 7,300 business loss. So minus 7,300 means business losses.